MicroStrategy, they had earnings and they missed on top and bottom, but the market is still kind of pricing out MicroStrategy a lot like the resiliency of Bitcoin. So sideways right here, I need it to stay above 310 by March. I've got downside protection if that's the case. I could consider continue to roll, maybe, I don't know, maybe another week if it's worth it. If I went out to the April expiration, maybe, but I probably don't want to take this trade into anything past July. I'm looking at this year for 2025. I'm looking at this as a really interesting first half of the year and a second half of the year. I think that look, if we're not going higher for the first half of the year, so let's say that we're sideways. Okay, let's say that the year is sideways. So from January to, let's say, like June, okay, we haven't really had any major downside. We haven't really had any major upside. We're just churning and there's all this uncertainty every single week or every whatever. If there's not really a lot of direction, the second half of the year is going to be something. Most likely something. Obviously, the market goes sideways for the entire year, but that's probably unlikely. So first half of the year, if we're sideways, I would be bracing for a lot more volatility one way or the other. Doesn't really matter what direction. Obviously, it's easier to see the market go higher if the market can kind of get through this waiting period of all this uncertainty and how aggressive like tariffs are potentially going to hurt things or not hurt things. What's the Fed going to do by June with the rate cut? Does the Fed change its stance at all? They're doing some type of pause and restrictive, like kind of hawkish pause right now. So if I can just kind of make an assessment of where the first half of the year is, second half of the year is where I think we get a lot of movement, possibly a lot more surprises. And I don't know if those are going to be positive or negative. Having one cut in the mix is okay. But if the Fed only cuts in June and does not cut for the rest of the year, I don't see the dollar necessarily getting too much weaker. I don't see the yields coming down too much. I think that we would be getting into that like very slow growth environment. And so right now, we have the hype of AI, but if it's hundreds of billions of dollars being spent on AI, but yet we have super high borrowing costs. I mean, if you got companies like Google and Apple and Microsoft and Amazon and just like companies that are just flush with cash, they can afford to spend hundreds of billions of dollars. Okay. But if you are a company that needs to borrow to spend money in AI and try to grow and try to build out this AI infrastructure, if you're borrowing at much higher rates than you could a couple of years ago, that's a big difference on slowing growth. That's a big reason why this is also pretty staggering. Everyone has maybe heard the phrase or the acronym IPO, initial price offering, right? That we have like 1 or 2% of like IPOs versus a traditional like 20%. Like the IPO number this is all like messed up during COVID when everything was coming out as a SPAC or a special purpose acquisition. That used to be like the fast track way to get an IPO. All that is like dried up. Like there's like nothing new coming out, and there's very few like big publicly traded companies or IPOs waiting. It is an interesting landscape. So I just think that a lot of good stuff has been priced in. A lot of good stuff is sitting near these all-time highs. At these valuations, the market typically underperforms. It's that simple. If you look out the next 3 to 5 years, it's probably going to be an underperforming. It's going to be an underperforming window for the S&P at these valuations. So we have yet to see a meaningful correction outside of August last year. We had a 4 to 5% correction December during the holidays, but are we going to pull back 10%? Are we going to pull back 10 to 20%? It's very possible. I mean, to get me a little bit more excited about buying a dip, I've got to see a correction probably to that degree. I've got to see like a 10 to 20% correction. Otherwise, I'll play China. I'll stay diversified. I'll play gold and silver. I'll play Bitcoin. Bitcoin is still going to be a lot tied to risk appetite. If we don't see positive flows and optimism, and I mean, I think Bitcoin is a lot of good and a lot of promise and a lot of optimism, but it's going to have to require positive flows across the board. It's not going to survive on its own. Okay. So anyway, just thoughts on this year. I mean, a lot of income trades, and that's what's moving the needle for me. And the exposure I've had on China is looking pretty good.
If you'd like to see more of our free daily chart of the days, make sure to join our Telegram channel if you have not already joined. And if you are already in the Telegram channel, make sure to hit that thumbs up button to support our work. Also, quick reminder that if you're looking for free tools and free education in the trading space, head over to a1trading.com. You can check out our free technical, fundamental courses and much more.